Hello everybody, let's talk about HIMS today. HIMS is a channel favorite. I've been covering it since the early days. This was my second video on HIMS more than 2 years ago. And I'm not putting this, I'm very happy about that. But the reason why I'm showing this video specifically here is because I'm going to get to the valuation. And as you see 2 years ago in this video, when I was buying the stock, and keep in mind, this is not bragging. Many people on Twitter got that stock in the $3 to $4 range. I was late. I got in this stock in 6 to 7 to 8 and then up to 9 and 10. So I was late. This is not bragging. This is me being late. But then 2 years ago, the stock was at a 0.020. These were the early days of my channel. This calculation has not changed. So I'll show you what it is right now at the end of the video. But the summary is it ain't as cheap as it once was, is the summary of this video. But it's still very cheap, and you'll see why. But it's a victory, and it's a victory today because the stock hit all-time high again. So we've had a few days like that, and so it hit an all-time high again, and we've entered price discovery again, and so this is time to celebrate. I'm very excited, but the question is why? That's the point of this video. Why is it up? And is it still cheap? So let's get to the point. So there's multiple reasons why I think the stock is up on fire right now. One of them is the video I made 8 days ago. You may remember because of Tirzepatide, HIMS shot up because of Tirzepatide. And that was because of unrelated news on Tirzepatide, a GLP-1 that they do not sell. But the FDA, the new FDA at that point, said they will not enforcing action against compound pharmacies who are compounding Tirzepatide, who are copying Tirzepatide. Now, Tirzepatide is Zepbound. It's the little higher up GLP-1 that HIMS does not sell. HIMS never sold it because there were fear of the shortage ended, and the shortage has officially, quote unquote, right, officially ended per the FDA. And there's still a lawsuit where the compounders are saying, well, no, it's still a shortage. And so it's all the debate. And they go in rural areas and they're like, can you find it in rural areas or not? And it's a lawsuit, and the FDA is just not enforcing it. There is this debate as to whether there is a shortage or not. Now, this is positive news, though, for HIMS. Indirectly, we're multiple degrees from HIMS here, but indirectly it's positive news because that means that if semaglutide were to be not in shortage anymore, step one, semaglutide needs to not be in shortage anymore. You can see semaglutide is still in shortage right now. You can go on the FDA website. But if semaglutide was not in shortage anymore, well, we know that they would have between 3 and 6 months to stop selling, and the FDA would advertise a date to stop selling. That's point number one. But we also know that within those 3 to 6 months where they have to stop selling, the compounders of semaglutide, which is a huge drug, they would also do a lawsuit, and the FDA would likely also not enforce that ban against compound pharmacies at the risk of being called capricious, right? I think this is the legal term they use. It's like if you're gonna not enforce against one, you can't enforce against the other. But you see, there needs to be two things to happen for HIMS to be in the same situations as compounders of Tirzepatide. So in conclusion, I think this is looking more and more of a 2026 issue and not a 2025 issue. And remember, we're gonna have generic liraglutide, which is the original GLP-1. That's gonna be coming in the market for HIMS, manufactured by HIMS. So that's gonna be the backup. But then in 26 and 27, we have a new backup coming in dulaglutide, which is another GLP-1, which is gonna be off patent. So in my view, if the shortage were to end for semaglutide, it seems increasingly likely that this would be, if it were an issue, it would be an end of 25 issue, maybe an early 26 issue. And the market is short-term thinking, and because the market is short-term thinking, we are saying, okay, well, we don't have to worry about that just yet, and the stock is up. That would be my point number one as to why the stock is up. My idea number one as to why the stock is up so much. Another reason why the stock is up so much is, of course, the Senate hearings of Robert Kennedy, who's going to be a leading person in the U.S. healthcare system because he's going for his confirmation as the Secretary of Health and Human Services, and he said things in those hearings that are bullish for him. So, for example, Kennedy described GLP-1s as miracle drugs. And the only thing he said is that it should be used in children. And if you know Kennedy, that's his big thing, and I think it's most people's big thing. Most people should agree that children should not use GLP-1s. I think, when you're a child, you hopefully can eat in a certain way. Anyways, the point is, he's bullish on GLP-1s because he called them miracle drugs, and he also indicated his support for telemedicine. So that's two big deals, and he referenced an AI nurse. We know AI doctors are going to be the next big step for him eventually down the road. And he also expressed staunch language about, say, seizing certain drug patents and, drug pricing, etc., and some drug pricing being just too high. And so I don't know if $2,000 a month for Zepbound qualifies as too high for RFK or not. But the point is, calling the drugs too expensive, taking a stab at patents, making drug too expensive, attacking rent-seeking in the space, essentially, point number one, and talking positively about telemedicine and talking positively about GLP-1s, I think this could be a tailwind for HIMSS. And I know some people in the comment section were fearful about RFK. Well, you might be pleased to hear that he said all of these things. That's bullish to HIMSS now. And the third reason, one last reason why I think the market might be excited, and then we'll see next week coming up to the Super Bowl. But, there is this belief oftentimes that companies make it once they make an ad to the Super Bowl. And, of course, HIMSS is doing its own ad to the Super Bowl, and there's always a debate as to whether there's any return on these ads. Probably not, but it helps with unaided brand awareness, as they call it, and it's a milestone for a company to have an ad on the Super Bowl. And I watched this full ad. I recommend you watch it. It's a 1-minute ad. It's really good. I think this ad is really well done. It emphasizes the cost of drugs. It emphasizes that 74% of Americans are overweight. So I don't know which stats they use because I definitely don't see that when I go around in public. But that's the stat that they emphasized there. And they talk about how, of course, losing weight can help save lives. And yes, it's obvious that being a healthy weight, a BMI under 25, you have less complications, less issues if you have to go to surgery or whatever. All sorts of risk factors get eliminated if you lose weight. So everything they say in there, in my view, is accurate. No financial advice, no health advice. The gist. What I love though about this video is that they showed us these automated warehouses that I always talk about. I always tell you we don't need 45,000 pharmacies with people walking in the back end of the store and yelling at the drive-through window and waiting for a prescription 24 hours, 36 hours. We don't need that when we have robots, right? And you see, not just Amazon has robots. HIMSS has its own robots too. And since they're laser focused on pharmacy, I bet you their pharmacy robots get probably a lot more attention than all-purpose robots at Amazon. I'm not dismissing Amazon. I'm just saying I think HIMSS is far ahead, is what I'm saying on this one. And I love to see the robots displayed because that's the future. AI doctors and AI robots and perhaps AI delivery systems, by another company at some point. Anyways, I remember, let me go back to the point of this video, the valuation. So to quote Toby Keith, to paraphrase, it ain't as good as it once was, but it's still pretty good. So that's the extent of my joke here. So it's a 0.14. You're paying a 0.14 on enterprise value over gross profit over revenue growth. This asks the question, the question of my channel: how much am I paying for that growth? I'm trying to not pay a lot for growth. I'm paying a 0.14, and so that's pretty good. If you look at, say, a stock like LifeMD, which is the stock that I've been adding recently, if you follow my Patreon, you know that. I find LifeMD to be now significantly undervalued compared to HIMSS. It's a mini HIMSS. It used to be twice as cheap. It's not twice as cheap anymore. It's now more than twice as cheap. So I focus my buys on LifeMD now, and you understand that I have a very full position on HIMSS with my cost basis being under 10. I have a full position on HIMSS, but I'm not selling HIMSS. There's no way I'm selling HIMSS because I think it still has room in one way, which is multiple expansion. The average of all the stocks I'm showing you here, which are stocks that are specifically selected in my spreadsheet because they're cheap. I select these stocks because they're cheap, otherwise they wouldn't be in this spreadsheet. These stocks, the average, if I select it all on Excel and just get the average of these stocks is 0.3. So HIMSS is at a 0.14. The average is 0.3. So my spin on the PEG ratio of Peter Lynch, EV over GP over RG, is my modification of the PEG ratio for growth stocks. It still has a lot to run. It could still double, and then the stock of HIMSS would trade in line with other stocks that I find cheap in the sector. But as you know, I'm not a trader. I don't care for multiple expansion. I don't invest for that. I invest based on adoption. And this is where HIMSS really shines, is the adoption. How many companies do you see revenue at this scale? Their revenues are getting in the multi-billion-dollar range. How many companies do you see the revenues at this scale that has existed for this many years, where the revenue actually takes an inflection to the upside? We've seen an uptick in sales, an increase in sales, some of which, if not much of which, is driven by GLP-1s, but GLP-1s are still 10% of the revenue at HIMSS. Maybe they'll be 15 when they report to Q4. But, the legacy business, the ED drug business is still going strong. And the democratization of these pills is still going strong. The anxiety business at HIMSS is still going strong. So it's multiple business that are growing very fast at the same time. And assume a world, of course, where price to sell ratio on a stock does not fluctuate. Of course, that doesn't exist. Price to sell always fluctuates, but assume the price to sell is relatively stable over the long run. Then if the price to sell stays the same, your return is the sales growth, right? If the price to sell, the price of the stock, stays the same ratio of sales, then it's the sales growth that matters. And the sales growth at HIMSS is stellar. We are at 77% year over year. And so, in conclusion, there's two big tailwinds, in my view, for HIMSS. One of them is the multiple expansion, which I think there's still a room for a doubling in the multiple expansion. I don't care about that. I invest for adoption, and adoption is seen via the proxy of revenue adoption. Revenue growth and revenue expansion is alive, well, and accelerating at HIMSS. So this is why I still love these stocks. I'm not adding in these levels, but that's for risk management purposes. That's not because I don't like that price. That's for risk management. You can't have 20% of a portfolio be I mean, you could, and it may get there, but I'm not actively trying to get there. So anyways, this was not financial advice. This was not investment advice. This is just entertainment. I hope you were entertained. Please like, please subscribe, please follow me on X, please follow me on Patreon. Thank you so much for watching, and have a wonderful, wonderful day.